Boom, we are alive, ladies and gentlemen. Friday morning here in Costa Rica. We're going to be taking a look at the traditional markets, followed by Bitcoin, gold, silver, and some of the other more speculative venture-style assets that we have been watching in this space. So we're going to start with the S&P 500 today. This is the 6th hour, a little bit hard to tell, but if we zoom in, we had a full recovery from the other drop already, right to the top of the trading range. This is what I had said yesterday. We're going to likely see some type of trading range form here. The whole market has been rather bullish, and yesterday's CPI data fell below 3%. So a lot of people are trying to figure in how that the Fed may or may not cutting rates will affect the market. Again, eventually, I think what's going to happen in the long term is they're going to start printing. All asset prices in the face of that are going to rise. There's going to be less people. So inflation is not as dramatic in the general consumer price index as it was before. But here, all asset prices that are at least under demand will increase. So I think housing is very likely to collapse somewhere around this line, but I think assets like businesses are going to be one of the stronger positions just in general. One of the things I wanted to point out here was the kind of potential secondary top around 571 for the S&P 500, which we're kind of moving in towards now. This is where I think we're going to find out whether I'm just right about that market melt-up theory, that I suspect we will see some type of reaccumulation pattern that takes place with a fair amount of volatility here too. So this could lead to more dramatic volatility within our sector. But I think this is what we're going to end up seeing, something similar to this. And then from there, it really decides whether we go into full market melt-up or full market melt-down. But until that happens, I'm still largely bullish about most of the ecosystem. The NASDAQ was pushing into new highs the other day when we looked at it. Gold at the smaller range we were looking at, again, from right back from the bottom of the range up to the top and looking to test a breakout of this range. I suspect this is also a leading indicator that people just don't value currency as much, that commodities in general are more valuable than paper dollars. And I think that trend is only going to increase as time moves on and more people are aware that currency is basically worthless. I think currency has effectively always been worthless, but it's a great means of, it's like a wire, right? If you remove the wire, there's still the most important components available. You can try to connect them through any number of routes, but nonetheless, currency is the current wire. But I think that over time that's going to change. I suspect that Bitcoin will become the dominant world currency for some time, the world money, largely because governments can't trust each other, and what a better thing to do is trust technology between them to handle those kind of non-negotiable trust factors. Like the BRICS talking about using gold, or they're combining their currencies. That just doesn't make any sense. If you have a bunch of dictators trying to agree on something, like, it's not going to happen. So the most likely outcome is that Bitcoin is something they could agree on. So that's why we're long-term fans of Bitcoin in general. Again, the other day we looked at we're on the daily here. The stochastic RSI looks like it's trying to turn down. We're still in capitulation on the hash ribbons. The MACD, on the other hand, looks like it's just trying to cross over, and we've bottomed out on the daily for the RSI. So these are not signs that we're at the bottom, but it's signs that we are currently bottoming for Bitcoin to some degree or another. Again, the previous time we saw at least somewhat this deep of RSI sell zone was all the way back here when Bitcoin was $25,000 to $27,000. So there's a lot of speculation on whether this turns into reaccumulation or distribution. First off, again, it's important to note that we've had two really big kind of horizontal trading ranges that took place to get to this point after a long-term accumulation. That long-term accumulation has around 500 days into it to begin with, and we are approximately 293 days through the return of that cycle. Now, generally, from what I've noticed, is they are similar. If we go back to Bitcoin's previous move to the upside, now we have to measure the trading ranges a bit differently here. I actually think it's from here to here. So there's approximately 630 days to the accumulation side, right from the very notable bottom, and around 400 days to the peak out top. So here we're basically around, we could call this the notable bottom, around 550 days through accumulation, and around 293. So I do suspect that there's enough time to get us into the new highs for Bitcoin. But at the moment, again, it's just important to remember, a fetch was a great example of this. If we zoom out to fetch on the daily here, one of the things I was trying to talk myself through on the live stream with you guys during the January, February was we'd seen accumulation, reaccumulation, and then distribution. And then it became accumulation, reaccumulation, and then most likely some type of distribution. So I think what happens next is some form of reaccumulation. Now, where does that take place? We don't know yet. It's just better to be patient. It's going to form some type of horizontal trading range. For now, if we kind of respect each of these as their own trading ranges, you can see that we've actually fallen out or fallen into distribution multiple times here for fetch to begin with. And what we could be seeing taking place is a new reaccumulation range, which can just as easily turn to distribution. So again, it's important to remember that there's likely a move up to the top of this range that's about to take place through multiple assets. I think we're going to see volatility to the upside. For Bitcoin, that would be a retest of around the $64,000, $65,000 area. And again, it's important to remember that many of these oversold conditions are going to be moving into overbought conditions. Here, again, stochastic RSI is bottoming out. The MACD is just about to cross over the zero line, which usually makes a pretty big difference. And we've bottomed out already on the general RSI on the 6 hour too. So these indicators across multiple assets, I think if for Solana here too, proving that we might be at the bottom of the trading range and then making a move up to the trading range. So there's a volatility to the upside of around 50 to 60% with just as equal risk to the downside. So any entries in this particular area, I think, should be buckled by either I'm willing to hold this into new accumulation territory like spot buying, or very, very defensive stop losses after entry of a trade here, because again, it's likely that we move to the upside of the trading range or try to move to the upside of the trading range one more time to get us into oversold territory. On the daily, we're kind of in the middle, but at the bottom for Solana here, and again, multiple other assets, what we see is that the stochastic RSI is oversold. We've already oversold the RSI in general, and the MACD is kind of just teetering around the 0 point line. So there's probably some volatility coming. And again, we don't have too much further to go to break above the EMA bands for Solana here and the slow moving averages. So between all these and a few others, again, I guess we can look at Avalanche the same way. We had a nice, beautiful reaccumulation that turned into distribution, and now what appears to be a new trading range. So again, most of the time, or often, you'll go from the bottom of the trading range to the top, bottom of the trading range to the top, bottom of the trading range to the top, bottom all the way the trading range couldn't get back over the slow moving averages, and a clear breakdown. So this is where reaccumulation and distribution can kind of be confusing. Again, I made entries here and I got stopped out pretty much right at my entries, or just a bit above that, which with fees and everything works out to basically break even, and then moved into a lower trading range. I actually thought here was potentially going to be the reaccumulation, and I was a bit too early. But nonetheless, that move from the bottom of the trading range to the top of the trading range usually happens once or twice. So we've seen it at least once. And I suspect we're going to see it at least once more to the top of the trading range here for Avalanche as well, which also represents actually probably a little bit higher, upwards of 25%. So there are other assets that have a little bit clearer upside, like Solana. But again, just in general, any position here should assume downside is the most likely, because you're at basically a one-to-one risk to reward relationship for what, I mean, we could drop 50%, we could jump 50%. So just play defensive if you're entering a trade, and if you're entering for long-term positions, you can just keep dollar cost averaging effectively. Anyways, I just wanted to give a quick update about everything, the gold, SP 500, the rate cuts. I'm going to be traveling tomorrow, so I think no video Saturday, Sunday, but Monday through Friday, I'm going to try to make a video every day for at least the next 6 months. So some level of accountability to that, even if that means I just have to hold up my cell phone and make a video the old fashioned way. Anyways, 2 with the Arcane Bird. Thank you guys all for joining us today. We'll see you on the next episode.